Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome, ladies and gentlemen. Finally, we will take a look at the euro currency. We haven't taken a look at it within more than a month. I mean, the weekly research is that's why it's time to has come to update our view on the euro currency. Well, guys, in today weekly research, we have talked and written a lot about our position and explanation why we think that the euro currency right now stands under pressure and will remain under pressure in a considerable period of time, since it feels impact and hurts not only from the European economy itself, but from the geopolitical tensions, so the pressing from the United States external policy that has no interest to reestablish and to normalize the mutual relation with Russia, and that as we expect, will lead to new spiral of the terrible sanctions that US will demand from the European Union in relation to Russia, and that will hurt the European economy and all efforts that European Central Bank could take to stabilize and improve situation in the economy to struggle with the deflation could be mitigated by the escalation of the geopolitical tensions. That's our position in the shortly speaking. If you would like to know more details, you could visit our forum and read the weekly research where we've got the detailed explanation of why we think so. Now, in the short-term perspective, we expect that as market has failed with this ABCD retracement to the upside that we have discussed in September and turned to the downside, we think that market could form the butterfly pattern. Besides, the 1618 extension of the butterfly stands very close to the monthly objective point that we think will be 122 EU. The 1618 of the butterfly stands at 122.50. At the same time, this target stands significantly lower than the daily oversold, and hardly this area will be reached within the coming week. A more reliable target on the next week is this strong support, because that will be 127 objective point of this butterfly. And take a look, this level is accompanied by the monthly pivot support one. This is support one for November, the new monthly pivot support one. That's probably the target that market could hit on the next week. At the same time, you can see that market right now stands at oversold, and the further downward action has been stopped mostly due to the reaching of this daily oversold condition. That also in turn leads us to a conclusion that before downward action will start, market could show some bounce on the intraday charts, and this bounce probably would start as soon as on Monday and Tuesday. If we will take a look at the 4-hour time frame chart, we could see the reasons for this bounce and the possible targets of this bounce, targets of this rally that could be reached. You could see that market also has accomplished this ABC top D pattern, and this has happened right at the daily oversold condition. So that combination calls by Jed Napoli as the Kibi trade. It has the features of the stretch pattern, and generally speaking, it suggests some retracement up. This retracement is also suggested by the completion of the ABCD pattern, and we know that market could show as far as even 618 retracement or minor 38 retracement. Somewhere in this area, market should stop, and if this ABCD is still valid, they continue to move down. By looking at this ABCD pattern, what we see? First of all, we see that the CD leg is very fast. It's much faster than AB. And this tells that market probably will continue to move down to next extension of this ABCD, and this probably will be 1618 extension. That happens in most cases when the market shows fast acceleration on the CD leg. If even the completion point will stop market for some short time, this retracement probably will be not very significant because this lay very fast. And that's why mostly we would like to keep an eye on this level. As you can see, this is 4-hour chart confluence resistance 126.38, 136.60 area. That also includes untouched November monthly pivot point. If market will reach this resistance, it will simultaneously test the weekly pivot point. That's why, as retracement seems reasonable right now, we think that this is most probable area where this rally could stop, could bog out, and here downward action could be reestablished. So that's why we have the two-stage trading plan. If you're a scalp trader, you could watch for buy patterns on this area on the lower time frame charts, maybe on the hourly chart, on the 15-minute chart. Watch for the buy opportunities here and take in position with the target around this confluence. For positional traders who trade on the daily charts, that could be the nice opportunity for the selling of this rally. So when the market will reach this area, if some reversal patterns will be formed here, that will be nice opportunity to take the position with the journey right down to the next target on the daily chart that stands approximately at 123.75 area. That's our trading plan for the coming week. So let's see what EUR will give us.